When will mortgage rates come down? What will it take for prices to come down? Will I be able to find a home if I move? Will the housing market pick up next year? And is the market going to crash? We're going to explore many of these questions in this month's edition of the San Antonio Housing Market Report. Welcome back to the San Antonio Housing Market Update. This is the November 2024 edition. The election has been decided, and we're just around the corner from Thanksgiving. So I wanted to reiterate some things in the market here now that all of that craziness is over with the election, and we are moving forward with the housing market. And people have a lot of questions, so I'm going to try to answer a bunch of those questions before we get into the San Antonio data, just by exploring a couple of things here really quickly. Number one, I want to share a graph here just to get our heads around what is happening with housing prices and why we haven't seen a crash yet, and when we could expect to see some sort of movement to a crash scenario. But home value, equity, and debt, this is the main reason that we haven't seen a crash yet. And it is what you would want to watch for in the market if you want to predict a crash. But going back to 08, 09 era, again, this is the main reason we had the crash here. Looking at real estate values, okay, not just real estate values, but also the first line is real estate values, blue line. The second line is owner's equity, okay, how much the house was worth, okay, after you minus out the debt. The bottom line here is the actual mortgage liability. And what we had going on here in this era is a lot of borrowing against the value of the property. People would buy a home, then they would take out a home equity line of credit or something of that nature and go buy another house. A lot of crazy borrowing back then. The bar was very low for borrowing. You could, if you had a heartbeat, you could get a loan. Didn't matter how sketchy the income looked. You could get a loan. That practice has been changed. It's very strict now to get a mortgage, and that's why we see here. Fast forward to today, we have to the tune of $48.2 trillion in real estate value, $35.1 trillion in owner's equity, because only about $13.2 trillion in home mortgage liability. So the mortgages, they're not borrowing. People that own homes they're not borrowing against their home the way they were back in 08, 09. They're not doing all the risky loans against their property that they were doing back in 08, 09. So we have a lot of wiggle room. Owners have a lot of ability to sell the property instead of letting it go into foreclosure. It is not doing it. And for instance, we look at CNBC here. More homeowners just now in the third quarter started pulling cash out of their properties. All right. The various reasons they're doing that. They could be paying for student loan debt. They could be paying to remodel their home, different things. They could be consolidating bills, paying off credit cards, things of that nature, because credit card debt is rising. And people are trying to tackle that due to the inflation. But key points: in the third quarter of this year, mortgage holders withdrew $48 billion of home equity, which sounds like a lot, but when we're measuring that against trillions of dollars, it's not that much. They're sitting on a little over 17 trillion in total equity collectively, and they took just 0.42% of all tappable equity, less than half the rate seen in the decade leading up to the Fed hikes. So they're not borrowing as much as they had recently borrowed before the Fed started raising interest rates. Okay, so yes, they're borrowing money now against their home, but they're not borrowing at a rate that is alarming yet, that would lead to the homeowners falling into a lot of stress and inability to pay those mortgage payments back. This is also a reason that is tied to why interest rates, the new mortgage interest rates haven't fallen yet, because this is supplying some demand for lending. And part of mortgage rates is a supply and demand business. And as long as people are doing some borrowing, even though it's not uh, a new mortgage origination, it is supplying some demand in that area. But when that dries up, you could see mortgage rates to start falling again, as people are hoping that they're going to start falling with the Fed cutting its rate. And just to illustrate one more time what the equity means, and how it plays into a housing crash, crisis 0809, home mortgage debt 9.7 trillion, homeowners equity 8.2 trillion. As you can see there, definitely underwater. Fast forward to today, $13.2 trillion in home mortgage debt and $35.1 trillion in homeowner equity. So there's a lot of cash still available that homeowners can tap into and use. We really got to see this fall significantly before you could expect to start seeing a whole bunch of homes, way more supply than we have right now on the market. Although it is going up, but begrudgingly, it's going up very slowly as far as the number of houses available. Now, moving on to the 2025 home price forecast, due to all that information, we're still seeing a lot of forecasts in the positive territory. The average of all those forecasts, 2.5%. This is nationwide forecast for home appreciation. Our first one, the highest one, Goldman Sachs, 4.4% home price appreciation. And then the lowest one, Moody's, 0.3% home price appreciation. So every market's going to be different. You're going to see some markets that are negative. Some are going to be way positive as far as the home price appreciation. But not everyone's going to go up and not everyone's going to come down. The consensus here, though, is all positive with these respondents at 2.5% home price appreciation. So let's get to the San Antonio housing market numbers and we can see what we have cooking there. Okay, so here in San Antonio overall, it is still in a seller's market territory for the month through the month of October. And as you can see here, we're just outside that balanced market zone. It's been going up really slowly. We have 4.65 months worth of inventory. That's almost a 5% increase. So if you're looking for a home, you've got more homes to look at, than you did before. List price to sold price ratio, 97.4%. That's not down very much. So sellers are still getting about 97% of their asking price when it's priced correctly. Okay, those homes that are priced correctly are getting about 97%. The typical days on the market it's taken to sell a home, about 43 days for the median priced home. That's down 4.4%. So they were selling a little bit faster in the month of October. And the typical home sale price came in at $294,450. That's up slightly from the month before. And the estimated property values in San Antonio for the typical home came in at $283,610. That's down 0.1%, negative 0.1%, not very much, almost zero change in property value there in the month. And overall, last 12 months, minus 2.1%. So we'll see how we play out towards the beginning of the year. I'm not expecting this number to change very drastically now that we're in November, December timeframe, but it could certainly change after the holidays. Newly listed homes for sale in the month of October came in at a typical price of $300,000. So homeowners been getting the message, and they're listing their properties right there at that $300,000 mark, because that seems to be the area where buyers are most interested in purchasing a home. And that is up 5.8%. Number of properties that came on the market, 2,598. That is a 10% surge in listed properties, which is good news. So more opportunities for home buyers to find properties in the month of October. The typical size of the home came in at 1,828 square feet. Active listings. These listings, these homes were already on the market. They are at least on the market for 10 days. Okay, so they're not new listings anymore, and the typical price for these active listings comes in at about 300,000, and the number of properties in there increased about 3.4%, for a total of 7,435 properties. The typical days on the market came in at 63 days on the market, and the typical home size came in again at 1,848 square feet. New pending listings. These homes went under contract in the month of October, and they're done with their home inspection. They're done with all the renegotiations, and they're ready to close. The new pending listings came in at $290,000 typically. Okay, so that's off the $300,000 mark for those new listed homes. The number of properties that went into the new pending status came in at 1,256 properties. It's down 14.2%, so a little bit less buying activity. More sellers came into the market in October, but less buyers met those sellers at the closing table. Number of days in the market came in typically at 40 days in the market. That's down 16.7%, so they're closing a lot faster. And then pending, these are leftover pending listings from the previous month, and they came in at a typical list price of, or at least a list price of $299,995. Number of properties, 1,686 properties. It's down 10% again. So less buying activity again, showing up in the pending status. Days on the market came in higher for this group at 50 days on the market. And a little bit larger properties here, 1,900 square feet. And then sold properties, homes that sold in San Antonio in the month of October came in with a typical price of $294,450. That is slightly up, almost 1% from the previous month of September. And the number of properties that sold, 1,310. That's down just a little bit, 2.3%. Price per square foot came in at $160 a square foot. And again, supply. Okay, home supply, 4.65 months worth of inventory. Last month's change, 4.7%, and 12-month change, 15.1%. So increase in inventory. So we're getting our inventory. We're getting new inventory for buyers to purchase. My biggest suggestion is to look not just at those new listings, look at the active listings. Look at the ones that have been there for a while. You know, all of these properties. If you're looking for a home and you're only looking at the new listings, you're missing out. These folks, if you're looking for motivated sellers, okay, you're looking for people that are motivated. You don't get more motivated than a home that's been sitting on the market without any offers. Those guys are ready to make a deal. If you're not writing offers on, or you're not asking, you're not going to get anything. And you know, this is the biggest pool right here of people that are ready to sell. They just haven't received an offer yet, or they haven't received the right offer. So you know, get back out there. If you're looking for a home, you're waiting. Don't wait for other people to make these deals, because people are making deals every day. If you have any questions about this, you're thinking about getting into the market or selling your home, you can reach me at 210-260-6617. And as always, if you have any questions, I'm here. Happy Thanksgiving.